Today, we are talking about a ticker that has been on absolute rollercoaster, AST SpaceMobile, ticker ASTS. If you don't know this name yet, where have you been? This is satellite to phone company. That chart alone tells a wild story. Let's just look at the today first green candle, up 8.88% on the day. Open at 64.68, dipped to a low of 64.51, then ripped up to high of the $73.20. Close season at $71.45. That's a solid green close, no cap. And volume 22.24 million shares traded. People are paying attention. Now let's zoom out because the real story is the last 10 months. Back in September, this stock was chilling around $45 to $50 zone. Quite boring, nothing crazy, just building up its energy. Then October hits and boom, it starts climbing toward the $90 to $100 range. That's basically double in a few weeks, which is insane if you think about it. But here's the thing about the stocks like this. What goes up fast can come down fast too. By December, ASTS pulled all the way back to down to into $55 to $60 area. A lot of people probably panicked right there. Have you ever sold something too early out of fear? Let me know in the comments. I want to know your story. Because right after that dip, this thing went absolutely vertical. From $60 into late December to a peak near $130 by February. That is more than doubling again in like 6 to 8 weeks. Crazy moves like that are exactly why volatility scares some people and excites others. Which one are you? Do you run from volatility or do you chase it? After that February peak, the stock cooled off and traded sideways. Mostly have been $80 and $100 through March and April. Consolidation is not boring. It is actually healthy. Stocks need to catch their breath. Then in May, we saw another dip, this time down toward the $70 area. Classic pattern here, rally, pull back, consolidate, repeat. And then June came in clutch, the stock surged again, hitting a fresh high around $138. That is literally highest point on this entire chart we are looking at. But right after that high, we got a sharp pullback down into mid $60 before today's bounce. So right now, sitting at the $71.45, we are basically in the middle of this whole range, not at the bottom, not at the top, kind of the decision point. This is the part where patience really matters, not just hype. Stocks like this don't move in the straight lines, they move in the waves. And if you cannot handle the waves, the ocean is not for you feel me? The lesson here is not just buy ASTS or sell ASTS. I'm not your financial advisor. The lesson is that big moves come with big swings, and you have to respect both sides of the coin. So tell me honestly, would you have through the December dip or would you have bailed? Drop a comment. I genuinely want to see how this community thinks. If this breakdown helped you see the chart differently, smash that like button for me. And if you want more of this no cap chart breakdowns, hit subscribe. Let's keep grinding and learning together, one candle at a time.